Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, quick market update, see what's been going on this week. Let's jump straight into the charts then. You got cable here, or the exchange rate between the British pound and the US dollar, which seems to have stabilized a little bit in the last 2 days. It's currently, as you can see, just above 107. It's holding above these two key support levels here. So the first one, just above 105, that's the all-time low from the 1980s, and then this 103.50 is the all-time low that we printed earlier this week. So yeah, we are stabilizing here for now, but to the upside there's very little by way of resistance, all the way going back to the area of the pandemic crash low, which is around 114. So we're kind of in no man's land from a technical perspective. The RSI is around 18, so we're very, very oversold. So, I think there is some scope for a bit of a relief rally in sterling. Of course, this depends on a lot of things potentially going right for sterling, like potentially if we see a bit of an improvement in risk appetite and a rally in US equities, that would be needed. Is that going to happen? Very difficult to know. I mean, US equities have been getting hammered recently, so maybe a bit of a rally is overdue. But the fundamental backdrop with high inflation and seemingly a more hawkish Fed, well, not seemingly, they told us last week that they're going to be much more hawkish. And now, as a result, people getting more and more worried about US recession and a global recession and all this kind of stuff. Is this rally going to happen? I don't know. And then also there's UK concerns as well. Obviously, there's worries about this UK fiscal crisis in wake of last Friday's UK government economic plan announcement, which was basically a bunch of new borrowing to try and stimulate growth, including via tax cuts that are basically unfunded for rich people to try and kickstart, like, investment and productivity growth and all that kind of stuff. In wake of the turmoil that has caused, the Bank of England on Wednesday announced that it would be buying UK 30-year bonds, and that has triggered a massive turnaround in the 30-year yield, which at one point went above 5%, and it's now, well, last I saw it had dropped about 50 basis points, which was just a massive, massive intraday move for the UK 30-year. I can't remember what the exact statistic was, but biggest move in a very, very long time. So potentially, okay, Bank of England buying bonds to stabilise UK markets. Potentially, if we get some big interest rate hikes coming up soon from the Bank of England as well, to make them more hawkish than the Fed, that could help save sterling a little bit. But, UK economic outlook in the near term still very, very ugly. So if we did get back to this 114 area, which is a big rally from current levels, so I'm not convinced we will. But if we did, and things are still how they are fundamentally, that's a good area to, re-engage short positions. But anyway, that's sterling. Let's have a look at euro dollar. Also been sort of stabilizing above, well, actually we did hit multi-year lows earlier this session, but we're still stabilizing around 0.96, a little bit lower on the week. Not really much to say about euro dollar, to be honest. The main thing we have coming up week for the euro is this flash inflation, flash CPI data we're getting on Friday. Obviously, inflation in the Eurozone yet to peak as the energy crisis worsens, and we're still not quite sure how hawkish the ECB is going to go. At the moment, they're telling us that they're still going to be way less hawkish than the Fed, but, we're going to have to wait and see. For now, this long-term downtrend that I've been banging on about for God knows how long remains very, very much in play, and I would be looking to sell any rally really back towards this parity level up here. Dollar yen also hanging out close to annual highs in wake of, we've had the Japanese government stepping in recently to try and draw a bit of a line in the sand. I mean, that's not what they've said they're doing, but it seems that they're trying to draw a bit of a line in the sand around 144. But, we're going to have to see. Yen remains very, 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 very vulnerable as the Bank of Japan remains very, very dovish. And we do have this US core PCE data coming out later this week. And if that is hotter than expected, it's expected 0.5% month over month, that could be the kind of catalyst which stimulates another dollar rally, which could push dollar yen higher, could push sterling back to fresh record lows. So yeah, a lot going on in currency markets. In terms of the stock market, let's quickly have a look. So we've had this slight pullback in global yields, stimulated in part by the Bank of England, which is what seems to be helping US stocks modestly, moderately on an intraday basis. I mean, the S&P 500 was in oversold territory earlier this week, seems to be trying to climb out of it now. Perhaps we are in for a bit of a relief rally after some big selling recently. But yeah, maybe we can get back above 3,700, test these lows here from early July. But guys, with the Fed being so hawkish and things fundamentally going the way they are, I don't think you can make an argument for a sustained push back to recent highs at the moment. Finally, oil. What's going on in the world of oil? Oil rallying a little bit. It's managed to get back above 80, but guys, very much still in a downtrend. That's my view anyway. Still got some key resistance, 21 DMA here, just under 85. 30-day DMA here, just under 90. This downtrend, global growth outlook deteriorating still. Things are not looking good, and I just can't see any push really back towards 90. I think instead we would hit, this downtrend and then continue going lower. But yeah, guys, main things this week, really, we've got plenty of Fed speak, ECB speak as well. Like we've got Powell coming up today, he's going to be hawkish. Plenty more FOMC speakers tomorrow. But then it's inflation data on Friday, really. And inflation, obviously, a key theme in the market right now. But guys, yeah, hope you enjoyed the video, and I'll see you all in the next one.